almost all other investments have counterparty risk. So they're dependent on a functioning financial system. Gold is one of the few liquid assets which is not dependent on it if you have physical. So it's a backup plan. It's something which, if, as they say, the shit hits the fan, will provide you a backing.
When inevitable turns into imminent, supply disruptions, surging demand, and low prices are setting up this commodity for a major run higher. According to legendary investor Rick Rule, we have two options. Either the world sees chaos or the price of this metal rises. To learn more, visit futuremoneytrends.com/u.
Hello, everyone, and welcome into crushthestreet.com. I'm Kenneth Amaduri, and I'm joined today with Gregor Gregersen, founder of Silver Bullion SG. He's a first-time guest, and we're going to be talking about metals and markets. And yes, the dollar is on the move, so let's start there. Gregor, how are you today, friend?
Very good.
Well, I've been saying for some time now that Trump has the ability to bust the gold market with just his Twitter account. And who knows if that'll happen? I don't know. But the dollar, interestingly enough, got slammed with Trump calling it too strong against the Chinese currency. This just happened. And, I didn't know this, but it was in the Washington or the Wall Street Journal actually pointed it out that presidents don't typically comment on dollar strength. And Trump, obviously he's not afraid to cross the line here and there. But you know what? Let's start there. What are your thoughts on the dollar and precious metals and gold and, Trump, all these things?
Yeah, well, the way I look at it is, as you know, I live in Singapore, and so I'm German originally, so I kind of get info from different countries, from Germany, from Asia, and so on. So, and the way I look at it is, China, I think, is very concerned about the Taiwan issue, and they're very concerned about tariffs. So, if Trump were to actually put up a tariff, China is going to retaliate because that's going to do immense damage to them. And China still has a very large amount of U.S. debt. So what China could do will be to start dumping U.S. dollars, which of course would hold their positions, but it's a little bit, a matter of who's going to start doing that first. And if there's a certain kind of events following up to that, that might actually create quite a bit of trouble for the U.S. dollar. So with Trump saying, mentioning China and mentioning the U.S. dollar, I would imagine that some of these fears or some of these worries might be stoked from that comment. So that's one of the big sort of worries I would have when it comes to that type of statement.
Wow. And what about gold? Is gold going to be the beneficiary here with Trump being in office, or uncertainty, or is Trump likely to see a stronger dollar environment like we've seen since the election?
Well, when we talk about gold, I think the important thing to differentiate is the difference between paper gold, which determines the price mostly, and physical gold. Now, China has been buying very large amounts of physical gold without driving the price up very much, because the price is being determined in future markets where you would have leverage of 10 or 20 to 1. So in essence, you can sell, $100 million worth of gold with $10 million or $5 million. But if you buy the physical, you actually need to have $100 million to buy it. So the demand of physical gold does not necessarily influence the price of gold. And people often are surprised to hear this if they haven't looked a little bit more deeply into it. But it's very true for gold. It's very true for silver. So because of this, the markets tend to react one way or another based on what's happening in the future markets. And so short term, it's very hard to tell what is going to happen. To be honest, when Trump was elected, I expected the price of gold to be going up. It's not been going up. It went back down for a while. But now I kind of feel that it reached a base and it's gradually increasing in strength. It's the same with silver. I've been buying some silver myself. just because I've been seeing this slow strength every day. It seems to be going up 0.5%, 1%, and so on. So I feel there's some strength there. And I feel that the arguments that interest rates might be going up, we've been hearing that argument for 4 or 5 years already. So I think all the uncertainties that are happening in the world and the amount of uncertainty we're going to face is going to drive investors towards precious metals, and especially physical.
Gregor, I speak to Jim Rogers regularly, and he loves Singapore. He lives there, actually. He loves China. Yeah. From your perspective, what's so special about Singapore, and why is it interesting for investors?
Well, I've been at Jim's place a couple of times here in Singapore, and I think we moved to Singapore almost around the same time. We kind of saw the same great things about it. I moved here because I felt this was the only country which truly did what's best for its citizens over the long term. They have a planning horizon of 20 to 30 years. The taxes are very, very low, and yet they manage to have a budget surplus. And they do it through some very smart government. There's competition between the agencies here and so on and so on. So I just felt that this was a great place to move to. And when it comes to gold and silver, the reason why Singapore is so good is, it's a very rich country, so the likelihood of them nationalizing gold is very, very low. But the whole economy is also built on trust. There's so much investment that is coming to Singapore. And in Asia, it's pretty much seen as the Switzerland of Asia. So they would never do something to betray, trust by doing something like nationalizations, because that would pretty much be economic suicide. And I'm mentioning nationalizations because that's one reason why many people are placing gold in vaults run in Singapore, because they believe it's a safe place in case that we might have a scenario where there's a run on the dollar and we might see a repeat of nationalizations in the Western world. So that's, in a nutshell, is what makes Singapore an attractive place.
And Gregor, what is, in your opinion, gold and silver's role in our society and, in an investor's portfolio?
I see it as insurance. Now, when, it used to be that saying in the 80s and before that, put 10 or 15% of your assets into gold and silver and hope you never need it. And the idea being that if there's a major crisis, if there's a war, if a currency crisis, gold is going to retain its value and it's going to increase in value, while most other investments are likely to be going down, or almost all other investments have counterparty risk. So they're dependent on a functioning financial system. Gold is one of the few liquid assets which is not dependent on it if you have physical. So it's a backup plan. It's something which, if, as they say, the shit hits the fan, will provide you a backing. And in today's age, with so much uncertainty being out there, that's something which I think everybody should have a bit of.
Gregory, if you take all the world's assets, it is said that, bonds, stocks, ETFs, insurance, exclude real estate, 1% of the world's assets are invested in precious metals. And out of that, 0.02% is invested in physical silver. Now, and I want to get your thoughts on silver specifically. This would imply that the slightest move into silver could be, astronomical. And of course, this is what they're also saying about Bitcoin, but that's another topic. But what's your thoughts in regards to the upside that silver has?
Well, as you know, we call our company Silver Bullion. So I'm a big fan of silver because of some of the things you said. There's a ratio between gold and silver, and throughout history that usually used to be 16-1. Nowadays that ratio is around 70-1, and historically over the last 30 years it's been moving between 45 and 80. And so it makes a lot of sense when that ratio is high to buy silver as opposed to gold. That doesn't mean gold is a bad purchase. It's just that silver is relatively cheap compared to gold. And then when the ratio goes down, you sell your silver and you buy gold. If you do that every 3 years or so, 4 years, whenever that ratio hits these 80 and 45 levels, you would have made a 600% return over the last 30 years, on top of whatever gold and silver would have gone up. So that's one reason where, silver right now is quite cheap. But the second point is that silver is being used up at a very fast rate. We are using up more silver than we are producing. The Silver Institute, which published the data with Thomson Reuters, estimated that 132 million ounces of silver were being consumed in excess of what was being replaced last year. And this has been going on for many, many years. So we're physically having less and less silver. But at the same time, the prices, which are determined in future markets, don't necessarily reflect the fact that there's less and less physical holdings, because as long as industrial users can get the silver, and that physical supply isn't really making that big of a role. But I can tell you that from our end, whenever we've seen a price decline in silver, we've seen a very large influx of physical buyers. And we typically end up with shortages throughout the industry. The last time this happened was around September of 2015. And at that time, we couldn't get physical silver for around 2 months out of North America. And that tells you that as soon as, even a little bit of money, when we're talking in these contexts, starts flowing into silver, we are going to have shortages. And therefore, silver is a very good investment because you want to buy whatever there's a shortage of.
Gregor, you obviously have a pulse on the precious metals market like no one else. What do you suppose will be the trigger for the demand and for the flood of people to go in and purchase, gold and silver? Where do you see that coming from?
I think the actual catalyst which will do it might be secondary to what I consider to be more important, which is this trend. I feel that people are getting more and more uneasy about the future. And I think that's something that accumulates. And I give an example. When Brexit happened, our sales of silver and gold spiked by about 600% in the next 2 days. But it also added to that uncertainty where people are saying the world is changing and I'm not quite sure where it is changing to. And people might not be buying silver or gold right there and then, but they kind of put that somewhere in their mind. And as you have more of these effects happening, more people are starting to buy physical silver and gold. And so there might be a catalyst which is then sparking or pushing more people around the threshold. And that might cause more people to yet buy silver and gold. But I'm not sure whether there's any one catalyst which is really where you can give it most of the reason for doing that. I think it's more an addition of more and more reasons which might then be sparked by something. And that specific spark, that I don't know. But, it could be something like a trade war. I mean, a trade war is something which would definitely inflame spirits. Things might be happening very fast. And, people might get very worried and just naturally will grab gold and grab silver as a way of protecting some of their money. And if that happens, suddenly you might see shortages, and that might cause a lot more people to take note. And so if you ask me right now, that's probably the most likely events that I could see.
Let's talk about the stock markets for just a moment here. Last year, this time, the markets were in disarray. And for whatever reason, people seem to be a little more at ease, with Donald Trump in office about the future. As much crap as people give Donald Trump for being a loose cannon, people are very much comforted by the fact that, he's going to do some things to stabilize the economy and help the economy. But, let's start off with, or let's move on here with, what are your opinions on the U.S. stock market and just global stocks in general?
Well, the U.S. printed a whole lot of cash post-2008. If you look at the amount of base money, it went up by over 400%. So that money eventually has to go somewhere, and if you have quite a bit of money, you're unlikely to be spending more of that money. You're much more likely to be putting that money into stocks or real estate. So with bonds paying so little, there's really little interest in bonds nowadays. And so where do you put it? Well, you put it in the stock market. So we are seeing more nominal heights as the stock market makes more and more record highs. But it's my feelings that, that money might flow out pretty quickly with a reversal, because I don't see the world economy doing that well. So I don't really believe in the rally. I think we might be facing a big fall at some point. And I also feel in similar ways with real estate, because I've been in Las Vegas in December. I was at a wealth management conference, and there were around 40 to 50 attendees, wealth managers, which were administering between $80 and $3 billion each. So this was big money. And a lot of these people wanted to have 20% return in real estate. And for getting 20% return in real estate, that's telling me they're taking on a lot of risks. And to see so many people wanting to do that, that's telling me that we might be looking at a bubble. So my current feeling is that it might be a good time to be a bit careful, to put some money into cash, to put some money into precious metals, and just be prepared that the party might not keep on going like this.
Well, I want to talk about your company for a moment here. You offer a unique peer-to-peer service for your clients, and I'd love for you to explain that to us a little more in detail, how it works and why it's unique.
Sure. Well, essentially, just to give you a quick piece of background, what we specialize in is in physical bullion. So we don't really work with banks, we don't work with futures. Everything is fully owned, purchased by a customer, it becomes his property, and then it's uniquely tracked as a unique parcel, with a unique ID. And a while back, 3 years ago, a customer asked if he could take a loan against that bullion. He needed some cash, but he didn't want to sell the gold. And my answer was no, because I had no way of making that work. But it got me thinking on how could I say yes? And of course, the first idea is, well, let's see if I can go with a bank, which will use it as collateral, give a loan, and then I can forward that loan. But there was a lot of problems with it, and it wasn't really an ideal solution. And it's getting harder and harder nowadays to work with banks on these things anyhow. So Singapore actually turned out to be very supportive of fintech and P2P systems. So from a regulatory point of view, it turned out to be quite doable to allow one customer to lend or borrow cash to another customer using bullion as collateral. So when that became apparent, we said, okay, well, great, let's build a system whereby a customer who, say, has $100,000 worth of gold can get a $50,000 loan from another customer. And the way he will do that is by putting up a borrowing request. The borrowing request will show all the individual parcels that he's putting up as collateral with photo. And he will then say, I want to borrow, say, $50,000, and he will say at 3%. And he will specify the duration, say for 1 year. Now, a lender might come in and say, well, I have $50,000, but I want 4%. So there will be a lending offer at 4%. The borrower will see it and say, well, I'm willing to go for 3.5%. lender might say 3.5 is fine, and then a contract is made. The lender would then transfer the cash to us, to Silver Bullion, and we forward it to the borrower. After the 1 year period, the borrower returns the funds with interest, and we forward it to the lender. So that's the basic idea. The loan is collateralized by 200% worth of bullion. So for $50,000 loan, you need $100,000 worth of gold. And if during the duration of the loan, the collateral were to fall to 125%, the borrower gets a margin call. If it goes to 110, we liquidate the bullion, meaning we sell it to make sure that the lender always gets his principal and interest back. So the whole system is designed to be very safe and outside of the financial system. The bullion is also fully insured. So again, you're having a very safe asset. If the borrower were to be late in paying, we have what's called a sweeper fund, which will actually make up for the late payment as well. So that's another safety mechanism we build up. So it's a very safe way to lend. And because it's so safe, we had quite a lot of lenders, and that has driven down the interest rate. When we first launched it, lenders were willing to lend around 6 or 7%, and that has gone down to around 2.5% now. So that's the current rates. A little bit higher for 2-year loans, a little bit lower for 1 month or 6 months loans.
Wow. Well, I mean, that's incredible, actually, and interesting that the free market, such as what you guys are doing, is coming up with all these alternatives to traditional banking. You know, I've been doing some business with Lending Club and investing some money there and some of these other peer lending options. And you know what? I love that there's all these different solutions coming up that compete with traditional banking. And I really do believe that is the future. Gregor, and if people wanted to, learn more about what you do and, how they can purchase precious metals from you, store with you, or even get involved with this peer-to-peer lending, please let them know where they would go and what they would find.
Yeah, well, the easiest thing will be for you to go to silverbullion.com.sg. So again, that is .com.sg. And when you go there, you'll be able to see the bullion we have. You can find out about the storage systems we have. You can also find out about the peer-to-peer. We've had around 830 contracts done so far, around $16 million so in US dollars worth of transactions. So you would also be able to transfer in bullion, meaning if you're storing bullion somewhere else, you can transfer it to us. We will test it. It will be stored. You'll be photographed. And you can use the P2P system to get a loan at around 2.5% to 3%. So those are all options. If you're in Singapore, you can come visit us. We run our own vault. We are storing around $250 million in the vault of precious metals. And you can see how we do testing. So we are trying to be very transparent. And typically when people see what we do, they tend to learn a lot, and they tend to like what we are doing. So we have quite a lot of passion on these things.
Well, hey, I would love to come out there and visit you one of these days. I'm definitely going to put that on my to-do list. Gregor Gregersen, thank you so much for coming on the show.
Yep, thank you for having me.